All right, so you just watched a long video of me doing all of these methods, and I told you we would sum them up or kind of summarize them all when we came back to the next video. So here we go. We have perpetual up here, FIFO, average cost, and LIFO. I listed out like that because I'd like for you to see that average cost is always in the middle of LIFO and FIFO. Okay. So, and then down here on periodic, now remember, perpetual and periodic FIFO are the same. Okay. So you don't really have to do it twice. You have the answers for both of those. All right. Now remember your cost of goods sold. Remember, this goes to the income statement. Your ending inventory goes to the balance sheet. Again, cost of goods sold goes to income statement. Ending inventory goes to the balance sheet. So in that, as I mentioned, in that inflationary period, because we did have an inflationary period with this problem, it started with 550 and went all the way up to 750. So in that inflationary period, LIFO will usually give us a larger cost of goods sold. Okay, because we're pulling from the last layers. Those last layers are usually the more expensive. Okay, so that's a quick summary of those. Now we're going to flip back over to the PowerPoint, and there's a lot of factors that go into which method a company is going to use. Um, there could be inventory cost flow assumption, depreciation method, pension assumptions. There could be a lot of other things that go into this decision on how to do it. Most businesses are going to try, now US business, because International Financial Reporting Standards does not allow LIFO. In US GAAP, LIFO is usually used quite a bit because it gives us this higher cost of goods sold right here. Higher cost of goods sold, which means lower net income. Lower net income means lower taxes. So there's a lot of companies that actually use LIFO in the US. Okay. So physical flow of goods, it does not have to match the physical flow. So if you've got anything perishable, you're probably going to rotate it on a FIFO basis. If you have something like dirt, coal, you're not going to be able to rotate that on a FIFO basis. You can, but it would be really, really hard. Okay. So the physical flow does not have to match the dollar flow. Okay, so we can rotate things on a FIFO basis, then dollar flow could be LIFO. Okay, all right. I've kind of mentioned income taxes. That's one of the reasons why they would use LIFO. Okay, moving right along. All right, so sometimes we need to have information on FIFO, even though we're really trying to get the best of both worlds. We need some information for FIFO, but we also need lower taxes for LIFO. So what they'll do is they'll create what's called a LIFO reserve account. It is a contra account. And they have a problem here. We're going to walk through this really quick. So this is DoubleTree Corporation began operations in 2027. The company maintains its internal inventory records using FIFO, but reports ending inventory and cost of goods sold using LIFO. Okay, so here is what they give us for 3 years. Okay, so notice the difference between these two right there is $10,000. Okay, so that contra account, LIFO reserve, I think I've already wrote that out down below here, but I'm going to do it right here. So for year one needs to be $10,000. We're assuming a zero balance in that account because it's a brand new business. All right. So the journal entry that we'll make for that first year will be to debit cost of goods sold, credit the LIFO reserve. Okay. That's increasing our cost of goods sold. So our cost of goods sold, they do this calculation. down below, but we would take that 600,000 and add the 10,000, right? So that would give you cost of goods sold of 610,000. All right. The next one, look at the difference between LIFO and FIFO. We have, oops, sorry, 30,000. Okay. You got to be careful. I can't make my entry for 30,000 because I already have 10,000 in my LIFO reserve. So my ending balance needs to be 30,000, but I don't need the entire 30,000. I only need 20,000. Okay. So my entry for the next year will be to debit cost of goods sold and credit the LIFO reserve. Okay. Let's move on to the next year. The difference between these two is 25,000. So we want to end with 25,000 in there. Now it's going down. So we're going to have to debit the LIFO reserve of $5,000. So the entry will look exactly opposite as the first two entries. Okay. And then they give you a little spreadsheet here on how the inventory, I'm sorry, what the cost of goods sold was. So here in that first year, I said cost of goods sold was 610. We added 20,000 to it, got it up to 740,000, and then we subtracted 5 to get 845. Okay, so that's how we do LIFO reserve. Their companies are going to disclose this information and what it is under LIFO, what it is under FIFO. Okay, let's talk about LIFO liquidation. Okay, so we went through that whole problem, and I'll just jump back over here really quick. Notice how at the end of the year for LIFO, we had those earlier. So this right here, that was at $5.50. Okay. If you go roll over into the next year, that layer is probably not going to disappear. It's probably not going to disappear for quite a long time. Okay. Argument for LIFO, they say it creates a better matching on the income statement, but it does not give us a really good number for ending inventory on the balance sheet. Okay, so it's a give and take, a balance between the two. So what happens if they don't keep buying inventory and they start eroding some of those layers? Let's just say that $5.50 was 20 years ago, not a year ago, and they didn't keep buying inventory and they start selling those items that's in that very low. You're matching up today's revenues with costs that could be back to 20 years ago. Okay, so that's what we call LIFO liquidation, and management has to be very careful and keep an eye on that, because if they don't keep on buying inventory, then they'll erode those layers of liquidation. Okay, I'm not going to go through a problem because I want to get through this a little faster, the lecture notes, and then maybe in class we will work some of the problems. All right, I'll see you in the next video.